This stock has been slipping and sliding, and I'm losing patience. This gentleman is Mr. Ian Mickens, the chairman of Unilever. How can a company with almost 100 years in Trinidad, dominating the market for decades, and known for its high dividend payments, have such poor returns in recent years? In this weekly wrap up, I will let you know why I'm losing patience in Unilever Caribbean Limited, as well as briefly touch on some business news that may or may not impact my portfolio. Let's get into it. At the end of Valentine's week, my portfolio now stands at 496,970. Total return so far is still in the minus region at 4,516, and the estimated dividend so far is 27,715. Over the past week, some of my stocks moved in the positive direction and some didn't. So let's highlight the top 6 movers. West Indian Tobacco gained 4.5% over the last 7 days, followed by Unilever Caribbean, which gained 4% over the last 7 days, and CIBC Caribbean Bank, which gained 2.6% over the last 7 days. On the negative side, we had Grace Kelly, which remained stable at 0%, no movement. National Flour Mills, which lost a value of minus 1.2% over the last week. And LJ Williams, which lost 13.3% over the last week. So those were the big movers for the last 7 days. And now I'll highlight some business news that's currently in the media. In this quick news brief, I would just like to highlight some business news that either may or may not impact any of my current holdings. Starting with Massey. Today we are diving into a major financial move by Massey Holdings. The company has secured a 150 million US long-term financial deal with IDB Invest. Of this, 90 million will be term financing with a 10-year repayment period, a 3-year grace period, and a competitive interest rate tied to the market benchmarks for the fixed option. Massey's CEO, Garvis Warner, emphasized that this deal is a significant step forward in implementing their strategic growth plans. The funds will support Massey's expansion and sustainable growth efforts across the Caribbean. IDB Invest will also provide advisory services focused on sustainability, including climate initiatives, digital transformation, and food security. This financing underscores Massey's commitment to driving operational improvements and supporting the region's economic development. Stay tuned as we watch this unfold. As you know, NEL has stake in TSCT, so let's see what news is coming out of TSCT, Telecommunication Services of Trinidad and Tobago. Anthony Pearson, an experienced ICT consultant with over a decade in the field, has been appointed chairman of the Telecommunication Services of Trinidad and Tobago. He has joined TSCT board on December 2023, and now steps into the leadership role at a critical time for the company. TSCT, the largest telecommunications provider in Trinidad and Tobago, is navigating a rapidly changing digital landscape. Pearson's expertise is expected to guide the company through its next phase of growth and focusing on innovation and improvement in governance. Pearson succeeds former chairman Roach, who served from 2020 after replacing Robert Myers. With this new leadership, TSCT aims to strengthen its position as a key player in the country's ICT and telecommunications sector. So we wish him luck and hopefully he can bring profits to all shareholders. LJ Williams Group records 2.4 million after-tax profits for the 9 months ending December 31st, 2024, down from 3.8 million in the same period last year. That's interesting because they haven't paid any dividends ever since I gained their stock. The decline was driven by reduced discretionary spending, impacting sales and at its subsidiary, the Home Store. Despite this, the company's chairman remains confident about the recovery and growth in 2025. I'm sorry, but I'm not so confident. LJ Williams shares are one of those shares I hope to get rid of. And that was it with the business news. I've held Unilever shares since 2019. And since I've held the shares, the value has been slowly declining. However, they have provided a constant stream of dividend payments, and I'll show you the details later. But analysts have recommended that Unilever is a hold, but a hold with caution, because there are some key risks, namely revenue decline and competitive pressures. However, they have a key strength, which is strong cash reserves and no long-term debt. So weighing these key risks and these key strengths, analysts are recommending that you hold this stock with caution. Why should you hold? Well, there are a couple of factors. Based on their last annual report in 2023, their profitability has improved. Their net profit increased 75.6% from 9.8 million to 17.2 million. The operating profit before restructuring was 25.4 million, showing cost discipline. They have a strong balance sheet, as I said earlier, no long-term debt, which is characteristic of reducing financial risk. Their cash reserves currently stand at 157.8 million, which provides them liquidity. Their restructuring costs are declining. 2.2 million was spent in restructuring costs in 2023 versus 30.6 million in 2022. Future earnings have stabilized as these costs phase out. However, there are reasons for caution. Their overall revenue decline is a major concern. Sales have dropped 20% year over year from 256.1 million to 204.8 million. If revenue continues to fall, future profits could be impacted, and that is directly related to the share price. Dividend cut could signal uncertainty. The payout reduced from 112.8 million to 75.6 million. This indicates management is conserving cash, possibly expecting more challenges. That's not a good sign for shareholders. There are also market risk and competition. Declining sales suggest that Unilever is losing market share. Exposure to foreign exchange risk, that is 35.8 million in US-based assets, could impact results. So, what analysts believe that for the long-term investor, like myself, hold and monitor revenue trends, look for signs sales are recovering, and cost control improvements. If revenue stabilizes, dividends could rebound, supporting stock value, and hopefully the stock price can rebound. For short-term investors, sell on strength. If the stock price rises due to temporary market optimism, that's your time to sell. But I don't endorse this sort of short-term buying of shares. If you're in it for the long haul. So the final verdict for Unilever Caribbean Limited is hold but monitor closely. And that's what I'm doing. But like their soapy products, holding these shares is starting to feel a bit slippery. So I'm not sure. Let me know in the comments if you own Unilever shares and what you think. I'll continue to monitor as these analysts recommend. One last detail I would like to share with you with Unilever. So this is my performance spreadsheet. As you can see, I hope you can see on your phone or on your mobile or on your TV or your iPad, whatever device you're using to listen to my post. So I bought their shares in May 26, 2019, when it was a price of $26. Yep, $26. Now it's gone down to $11.19. So you can see over time, the price has dropped. And that was just a one-time purchase I made. Since then, I have been holding with caution. I thought I was buying a value stock and it will proceed to gain value over time. But steadily over the years, it just went further down in value. However, the good note is that it was maintaining dividend payments over this period of time. So, in the calculation of the final performance since inception, the total capital gain loss is roughly $11,107.50. However, over that same period of time, I gained $8,077.50 in dividends. So I lost minus 56.96% in capital gain, but I earned 41.42% in dividends. So overall, let me just scroll down a bit. Overall, the average investment period of 5.74 years, the total return is minus 15.54. Not too bad. In fact, what is this actually saying? That if I keep hold of these stocks, eventually, let me repeat that. If I keep hold of these stocks and the share price stabilizes, eventually I'll get sufficient dividend payments such that it will cancel out this loss. So I'll be net about zero. But as a long-term investor, what we want to see is two things. We want to see steady price growth in the value of the stock. So we have a positive value in the capital gains. And we also want to see constant and increasing dividends. That's the ideal stock that we want to buy. And in a future post, I will show what is the ideal stock in my portfolio to show when you choose strategically, you pay less than the actual value of a stock and it gives you ever increasing dividends. That's the best stock to hold for the long term. Tell me what you think about Unilever stock in the comments. Bye for now.